Upstart Holdings is an interesting AI company that I think more investors will start focusing on as the Federal Reserve in the United States starts cutting interest rates. So I will be providing more coverage on this company as I have been in recent days. In this video, I'll dig a little deeper on what the management team said and what investors need to know about the company's most recently completed quarter. So the company's CEO talked about how the funding markets continue to improve as the year progresses, particularly since the Liberation Day fears in early April subsided. And I've been surprised about these prospects over the previous 2 years, actually, since the start of 2024. Many investors and many lenders, including companies like Upstart and SoFi, indicated that they expected the U.S. economy to slow down significantly. Those slowdowns or those fears of a slowdown never materialized in 2024, and the year turned out to be much better than expected macroeconomically. 2025 has been a little bit different in that the economy is slowing down now. In recent months, the number of jobs added to the economy have slowed, and the number of job openings have slowed considerably. But they're not as bad as was feared when the United States and President Donald Trump announced tariffs and increasing trade barriers against all trade partners. There was a huge slowdown in economic activity in the immediate aftermath of those announced tariffs. Since then, economic activity has recovered and returned to, I don't want to say normal levels, but levels that were much better than was feared. In June, the company priced and closed their second ABS deal as of 2025, delivering significantly improved execution compared to their first, which closed in April. It's worth noting that more recent transaction had nearly twice the number of investors as the first, including some new lenders. And I've seen similar results from SoFi, in that lenders are becoming more and more interested in participating in these markets. They want to fund these loans that are originated by companies like Upstart and SoFi because they like the rates of return. They like that lending with these companies, they can earn rates of return of 10, 15, or upwards of 20% if they go into the riskiest parts of these markets, which are personal loans. They can get a 20% return on investment. Of course, there's going to be defaults on some of the loans they make, thereby decreasing the return on investment. Click the link below to watch the full video.